Mondays always start with a false move, which is designed to stop out traders who open positions on the weekend. I say this every week, and you guys, if you've been here for a while, you will be used to me saying that. If you're brand new here, you may be like, what? This is new information to me. So if you are new here, welcome. I'm going to get into the current price action since our weekend trap and talk to you about what we need to be careful of moving into the US session, which at the time of filming this is still around about 2 hours away. So let's talk about what has happened over the weekend. One habit I really like to get you guys into, if you watch me on this channel, is the habit of drawing your weekend trap box from the end of US. You can see the dots down here show when US ended. So from price action from the end of US to the start of the dead gap zone, which is Sunday, 5 p.m. New York, no matter where you are in the world, you convert it to that time. And you want to see where the trap is in between drawing your box to mostly the candle closes within that weekend range. Now, we did have a push up during this weekend. You could call this candle right here part of the trap, because then we just came right back down. However, we still managed to keep the same low within that whole weekend. What usually follows that, sometime towards that Sunday 5 p.m. time, is we will have a false move, which is designed to stop out traders who took positions here. Now, sometimes that can be a double-sided stop hunt. If the range is tight and there have been many people opening both longs and shorts in the same range, you may get a stop hunt one way and then they come back the other way. If we tend to just drop out of the box or push up out of the box, that gives us a hint that most people had a bias. So there were heavy longs if we dropped to the downside, and there were heavy shorts if we dropped the other way. So that's what's happened so far here in the dead gap zone. We dropped out to the downside, and that is what we call false move week beginning. Now, following that is when you look for an M or W formation to give you the start of the actual trend for the day. Now, just a reminder, I am only on the 15-minute time frame. This strategy that we trade has both a daily and a weekly setup. If you're trading the daily setup, you're paying attention to the 5 and the 15-minute time frame, and for the most part, your trades will take a day or two at absolute most to play out. But if you're trading the weekly swing, you're expecting around 2 trades per week, and the whole trend for Monday can often be a false move. So you don't usually find your trend until around UK US Monday. Sometimes it even pushes out to the start of Tuesday. So all I'm focusing on, because it's Monday, all I'm focusing on for today is the daily setup. That's why I'm on a small time frame, because I'm not expecting at this point in time for the current trend to push into a 3-day swing until I see momentum come in, which hasn't happened. So with that in mind, you can see here that I've marked out this W formation. Now, after we fell out of the weekend box, we created this W. So we had this stopping volume candle here, which is a high volume one. If you match it up to the volume down here, you can see this is a fairly high spike in volume, and that comes in basically to stop the momentum in one direction, in this case to the downside, basically like putting the brakes on of a fast moving car type thing. Then price will rebound and then it will come back to repeat that level, but usually not all the way. Now, this happened all within the same session, which is, I don't prefer that setup when I'm looking for a swing, but as a day trade it counts. And ideally, once that hammer has been created in Asia, there's a hammer that creates the initial low of the day, and then usually a hammer that creates the initial high of the day as well, both within the Asia session. You want to wait to see price action consolidate and hold sideways for a minimum of 90 minutes after that candle before you are to believe that that low of the day is set and price is then going to move out to the upside. So you can see I've marked it here that when we got back to the close of this hammer, that was exactly on the 90-minute mark. So this does count as the initial low of the day. And from there, we've had our move out to the upside, where we would expect it to break the 50 EMA, which is the blue line right there on my chart. And then once it breaks that, it makes a run for the 200 EMA. Now, this is where we are right now and what we have to watch for if we're to believe that we're going to have continuation. One of two things can happen once it reaches the 200 EMA. It can either just consolidate at it, which is what it's done so far, or it can come back for a retracement. And usually when it's coming back for a retracement, it's coming back to recover some vector candles that cause the fast move to the upside. Now, the problem that I have is that I don't have too much volume in these candles to the upside. So if we look here, the only high volume one is this green candle, which as I'm filming this right now is about to get fully recovered in this candle right here. So once we move down through there, there's really not a lot left. And we do have, multiple attempts at this 200 EMA. So the next step from here, if we count this move out here as a level 1 rise, which at this point in time it is, because we have the W formation, and then within the right side of the W, you can see 1, 2, 3 green candles. So 3 fast hits in the same direction. That counts as a level 1 rise. Also, this green one crossed the 50 EMA with that volume candle as well. So all of those meet the criteria, but now what we're banking on is the retracement to create a higher low. And the worry is that now that it's broken down below this vector right here, I don't expect it really to stop at any of these. So really what I'm going to rely on right now is heat maps to see if there are any strong buy orders coming in at this price that will lead me to believe that this is actually, it is going to play out through 3 levels. So let's have a look at the heat maps. And yeah, this isn't looking all that promising. This high level order up here is showing why price is pulling back. So that's showing us that at 26,850 is where people want to short this. And if I look below price, I don't have any red zones really to hold it up. The highest amount of orders I have is here, which is at 26,700, which is not really high enough to cause a bounce, but hopefully more orders come in around that range, and then that will give us that higher low where we would then expect level 2 and level 3. So the other thing too is that if this ends up being the actual false move of Monday, then we would expect that US is going to reverse this trend to the upside today. And it does look like we've had a bit of a session behavioral shift because Asia ran the trend here, and UK at this point in time is held consolidation. It usually goes the other way. So it looks like we've had a behavioral shift. Sometimes we don't know why that is, but we turn to news events to see if anything makes sense there. So let's check out what news events we've got going on this week. Now, we don't really have any major news events, US news events, until Tuesday, tomorrow afternoon. That is, these are Dubai time. So Tuesday, 5:45 p.m. Dubai time. And then we have Wednesday FOMC meeting minutes. So there's nothing really today. So we are just looking for typical behavior. And unfortunately, the UK to US changeover is the trickiest one because US will either continue the trend that has been created during the day or it reverses it. And it really depends on what the market makers' targets are, which is the thing that we can't know. So really what you're looking for in the UK US changeover is at around 8 a.m. New York time, there will be a burst. It's called a UK burst. And what it is essentially is the UK market maker taking profit. Now, if they burst to the upside to take their profit, then that could be our level 2 rise. And what you would then wait for is to see if US causes a retracement for then continuation to the upside. If they burst to the downside, then this move was over, but you will then look for an M formation. So if the UK bursts to the downside towards the end of their session, then US starts and it creates a lower high. You're going to expect that this little move to the upside today was the fake move week beginning and we're going down from there. So keep an eye out for that. However, if UK bursts to the upside, then you're going to be looking for a higher low in US, and then you'd expect continuation to the upside, which would then be level 2 and level 3, and that would be all that you would expect. We would then have to look into tomorrow's price action to see if they're going to then reverse it there to the downside. But we'll leave that for another day. The fact that we have these shorts here, these high level shorts at 26,850, maybe at this point in time, that's a hint of which way the burst is going to go, but you never know because, market orders could come through that push right through it. So don't make any decisions just yet. The best time to get your trade trades is during the session changeovers. And by the way, these little dots down here, this is all part of a free indicator that we've designed that is available to you guys. So if you are interested in getting that, just go to indicators and search market session times here by trade, travel, chill, and you can add that one to your chart and you'll have these time zones. Now it's always correct because the time zones, the times that are down here for the sessions, they're set to New York time. So it doesn't matter where you live in the world, you don't have to go and change your time down here. You can have this set to your local time zone and this will still be marked as the correct session times, even when there's daylight savings. Like, you never ever have to worry about this needing to change settings or anything like that. It's always done for you, and you can play around with the settings, but these last 4 dots that you see at the end of the US and UK, they're where we expect the end of session bursts. So you can see here at the end of Asia, I have mine highlighted, we had that burst to the upside. So there is a profit taking that happens at the end of sessions, and they give you the hint as to what the setup is going to be into the next session. If you are new here and you're looking to trade these sorts of things, then be sure to check out the link in the description of my video to open an OKX account. That is my preferred exchange. You can check them out and decide if it's for you. I like that they have super low fees and they have so many options to trade on. And not only that, if you do use the link below, then you can unlock up to $30,000 in rewards, as well as a regular 15% discount off your trading fees, which certainly adds up over time. So whilst I'm looking at that, we'll have a look at Ethereum as well, just quickly. I haven't actually covered Ethereum for a while on this channel, so I'm going to do exactly the same thing and draw my weekend box around Ethereum's price action. And we can see here that we had this double-sided move to the upside to trap people over the weekend, and then that pushed down, and this right here would have stopped those people out. Looks like we had a final damage W here on Ethereum. We've had this break here that broke the 200 EMA, and this has been just slowly consolidating upwards, waiting for a retracement for a potential level 2. So Ethereum's in a little bit of a better place because it hasn't yet recovered its green vector here. So this is the area of interest for Ethereum, which lies between about 1803 and 1808. If it came back here and held this level, or even stayed above, because the 200 and the 50 EMA are both just a little bit above that area of interest. So anywhere around there, if it held that and started giving reversal signals like hammers, star formations, railroad tracks, etc., that'd be a good place to go long and then expect a level 2 rise out of that. So again, you'd be looking for that to happen around the session changeover. So still a couple of hours to go. And if that all did happen, then it's a pretty easy target back to the high of the day. So your setup is probably going to look something like this. If you can get an entry down here, you'd have your stop loss just under this consolidation here just to be safe. And then your take profit would be around the high of the day. That's going to give you nearly a 3-to-1 risk to reward trade, which is a very decent day trade for just one level. And then if that all happened in level 2, you'd expect another retracement and then a move up for level 3. So this is looking like a good setup, but it really is depending now that this retracement does give us bullish reversal candlestick formations after the retracement is done, and it doesn't break too much lower than this area of interest. It can break lower, but if it did, I'd be worried because there aren't vectors down here. So at the end of the day, a retracement, as long as it creates a higher low that is higher than the peak of the W, that counts. But we do still have our preferred areas, which is going to be this area that I just spoke of. So there you go, guys. If you enjoyed this video, if you learned something new, please consider subscribing. If you're not already subscribed, hit the like button. It really does help me get these videos around the internet. And you know, I'm just going to put it out there. I want to be the biggest female crypto YouTuber out there in the world. So I need your help to get there. I think I deserve it. Now it's just a matter of getting those numbers, guys. So a like, a subscribe really helps me get there. A comment as well would be really, really helpful. Enjoy your day, and I'll be back tomorrow to find the weekly swing.